The
Yeah.
market's in a bit of a tizzy here, and I'm very excited to hear your full perspective because we shared this update with what we're seeing in options contracts that are 5+ months out at this point, and how the last time we saw something like this where there's kind of evaporation of confidence in the market, it looks like, because there's contracts not being priced for that long out. We saw a pullback, and we shared this on our Twitter and in our newsletter today. Um, but we've seen a lot of stocks pulling back quite a bit today. Even though the market and the indices are not down that much underneath the surface, a lot have pulled back a lot already. So, how are you feeling about this pullback and your thoughts on the discover you made today of that options contract for long duration?
First of all, oh, definitely everybody remind me, I've got to get out of SPCE before close. I don't want to play earnings. We got a nice gain on it today. Um, but yeah, um I'm just like looking at this mess. Um It's concerning. And I mean it's also a lot worse than before because what I highlighted before was we were seeing a drop off on stocks losing coverage on everything less than 320 days before. And we moved it down to 190 and we just had to move it down from 190 to 150, which means they might drop off again soon. And we might lose upside downside coverage for a number of stocks. I don't know if I'm really willing to move it much lower than 150 because that isn't the long-term options markets. I'm already even a little hesitant to have it at 150 because then the numbers get a little too close to net option sentiment, in my opinion. But it's highly concerning because there's a big difference between something going down below 320, which is, those are leaps longer than a year. There's a lot of reasons why you wouldn't have options there, but if you're stopping to like make new options less than 6 months away, that means you're very concerned about the risk environment, right? And I think it's fair, right? Because we don't know 6 months from now if and I think I've zeroed in. I think we're dealing with a jobs problem. Like they didn't even report jobs. We talked about that OpenAI graph last week that was highly concerning. I think this absolutely has to do with jobs. And in that vein, I'm very concerned. I'm concerned, and there's also that volatility question though too, right? Because you can look at the fact that maybe we have that big downside, a real bad job situation, and they're also talking about like 2,000, per poor person, and it's bad if they're not giving it out to everyone. They're actually focusing it on under a certain income level because the prior bailouts, I'm not sure if they were income related, but anyway, the fact that they're already talking about that, I don't think that says out of the goodness of their hearts. And we did talk about like how it's kind of funny that everybody's mad about socialism, but also talking about giving everyone $2,000 payments. Pick a lane. But you have on the other side, maybe the government gets so worried about the shutdown that they want to take drastic action. Powell gets fired. They cut interest rates 3%. That's also on the table. So, yeah, I'd be, when we talked about this before, we said that if you have a view on the market, you don't necessarily mind originating options and just weighing the side you take. But if you don't want to originate them at all, it basically means your risk models are not functioning properly, right? And I could see why. And when I say not functioning properly, I mean like too much volatility. So yeah, why wouldn't we be concerned about that if institutions are basically saying like, oh, we don't really want to forecast this enough that we don't even want to originate options more than 5 months out. That's crazy.
I have a question. It's a little bit confusing to me because I I'm obviously off, but I would feel like well, shouldn't they just keep making the options contracts, and isn't the risk on the people buying them, which would be retail? So like, why are they unwilling to even like have them be available? Because wouldn't the buyers of them be the people taking risk?
Just no, because you have to price the options, right? As an institution, people buy them. But if you're pricing them wrong, like you lose, right? It's not everything's risk. Options are just a way of moving risk. If you don't price them in a way and other people are buying them and you're wrong, like run that scenario. Let's say you run like iHeartMedia was one of them. Like let's say you make you make put options available and calls at like let's say a $4 strike near where it's trading, and then when you list those puts, a bunch of people buy them up and you move the price, but they buy them up like crazy. Like you can move it as it goes, but the price goes up, but still they bought a lot of those puts. Maybe you didn't raise it fast enough, or your algorithms didn't raise it fast enough. And other people have a view. Other people had a view that you can't do.